Janet Yellen were to go, who gets the chance to get up at bat? Could it be the man in charge of the search party for the next Fed chief? That would be Gary Cohn. Charlie, what's going on here?
Listen, I mean, you know, I've done some reporting on this, Liz, is that Gary Cohn has kind of made it known inside Washington circles for a long time that he would like that job. The problem is that Gary Cohn was a commodities trader. He has about as much experience to be Fed chairman as our own Eric Bolling. Seriously, the same resume, the same college experience. Literally, no, I'm not criticizing Eric. I'm telling you that if you look at
because Eric traded oil, we know that at the 9X.
Look at his academic background. He is not a PhD in economics. He's never studied economics. I mean, he's a guy that was a commodities trader. So was Eric. And if you're going to put, I mean, that is what we're dealing here. So he's probably not going to be Fed chairman. The closest thing he's got is leading a committee to find, or leading a search to find one. And, you know, here's the one thing I would say about this. Donald Trump is playing with fire with this in this sense. Yeah, I keep hearing administration officials like Blake say we're going to get tax cuts done this year, and it's coming. But they haven't materialized yet, and they're not even close to materializing yet. And if you put in somebody in there that is not a dove like Janet Yellen, someone that believes in a strong dollar, someone who does not believe in constant easing every time you know, there's an economic downturn, who believes that inflation needs to be the first thing that the Fed addresses, not the other part of their dual mandate, which is employment. Well, then, you know, that could really hurt the economy under Trump, and maybe even cause a recession, because what you have is delayed fiscal policy. And then you would have monetary policy that isn't delayed, where you have tightening. And that's the problem. Janet Yellen is a dove. I mean, she's doing what Donald Trump, essentially, if you're Donald Trump right now, wants to do, or should want to do, which is marginally raise rates now and essentially say, I'm not going to do it unless I have to.
Don't you find it interesting, Charlie, that Donald Trump during the campaign said we should be raising rates? And look, as a real estate guy, I love low rates because people sign on to mortgages because they want to beat the clock before rates hike. But now he's saying he likes the low rate environment. What should people, I guess, distill from that?
I mean, Donald Trump said all sorts of stuff during the campaign. He said at one point he intimated that Ted Cruz's old man might have killed JFK. I mean, just that when you get into office, the prerogatives of the job are different. Donald Trump needs lower interest rates now until he gets his fiscal policy through. If he doesn't get this fiscal policy through, the tax cuts, particularly the corporate tax cuts, then he better hope that someone that he puts in as Fed chairman or chairwoman is a dove and wants to accommodate, because he's not going to have a lot of tools at his disposal. So he's got to get the thing is, what the market did today was really interesting, because it was really, the action was in the bond market, where you had bond prices spiking again
and yields dropping. Can we show the 10-year? I'm looking at that right now.
That really was the action. So what did the bond market say? The bond market said to you today, and this is pretty smart investing. Bond market said we're probably not going to get tax cuts this year. We're going to probably have a slow growth economy of 2%, because we're probably not going to get that. I'm not saying I agree with that. I'm just telling you what smart money is betting on. And the stocks, let's be real clear here. The stock market is being pushed marginally higher lately, particularly lately, by just a couple of stocks. A lot of stocks are treading water. So, you know, if you're the average investor out there, what does it mean, all this? Well, it means that smart money right now is casting doubt, a lot of doubt, on whether the fiscal policy gets through, and whether this level of a stock market, a Dow 21,000 plus, can actually hold. I'm not saying that's what's going to happen. I don't know what's going to happen. I'm just telling you. I'm just interpreting what's going on in the market, and the reason, and you can ascertain that by the relatively flat sort of market action today, based on what Yellen said, and the movement in the yield.
The 10-year's at 2.14, but by the way, yesterday at the close, it was at 2.4%. So we've seen it fall. It went, I believe, as low as 2.11% earlier today.
Now, here's one thing you have to worry. If you're if you're looking at the markets on where to put your money, when the yield on the 10-year goes below 2, that's when there are program trades where there'll be even more buying, and probably those program trades will signal to sell the Dow and sell the indexes. So just this is something you, as an average investor, Just you got to watch us and pay attention to these things. I'm not giving you, how to trade here. I'm telling you what to watch if you're worried about your portfolio.
Folks, we are not